Welcome back to Breaking Bitcoin. This is your daily source for everything cryptocurrency and personal finance. I'm Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. Hopefully you guys are doing fantastic wherever you're tuning in from, whether you're watching us on YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. Woo! We got a lot to talk about, and it's an exciting day because I get to be joined in studio by my good friend and senior analyst, Alex Pearson. 1 second, let me get him up. Boom. There he is. You gotta hit the unmute button on your head.
Hey guys, how's it going?
And there he is. All right, so we get to have some fun in the studio today with my friend, with the member of Cracking Cryptocurrency, senior analyst Alex, and break some charts down. So it's a pretty exciting day out there. It's Friday, generally profit-taking day. I don't know, Alex, what are you kind of expecting to see today?
I feel like there was already a lot of profit taking earlier in the week. Bitcoin looks like it's maybe bounced off of the order block that it had been retesting, right around the 11,000 range. Time is still, time will tell whether or not we continue upwards on Bitcoin and Ethereum, but I think a lot of the alts look like they've experienced their pullback, and it may be time to look for dips and stuff. Previously, I've been kind of bearish all week long, and that's sort of no longer the case today, especially DeFi coins, obviously, continuing to push hard this morning. If you look at the market, the entire DeFi market is just bouncing really hard right now, which you can't say is necessarily true for the other alt markets. BCH made a new low.
DeFi Perp making a new high today. So
yeah. DeFi Perp making a new high today. The major alts not doing so great. Mid cap, all right. Shitcoins coming up behind, but DeFi is still where it's at right now.
So you guys get to see a relatively fun episode of me. Still, listen, again, my posture is exactly the same as I said in the market analysis channel for the premium members last night, and as I echoed on Tuesday, I guess bellwethered on Tuesday. This is an area of the market where, in my opinion, I've had to evaluate just where I'm at, what I've been able to make, and just kind of the overall position of my capital. And I am still quite cautious and conservative. I think that probably the best place to be for a lot of people is probably, while not necessarily 100% out of the market, certainly in an echo from Alex Justin sounds fine. Yeah, so I'll probably have to mute my mic when Alex speaks. I got it.
Muted right
now. We'll get it all worked out, guys. This is live. I still think a good area for investors to be and participants is to be in a state of profit taking, right? Although I have largely stepped aside from the market. I do have, I'd say, about 20% capital allocated. I'm hedged. I'm in a safe position. I recommended the areas to hedge the premium members. We'll break some of that down in today's show. Listen, there's opportunities here for the market to continue. You never know when any kind of trend is going to end, but you do see it pause. And after you kind of look around and you say, okay, well, it's been a good couple of months of profit taking. I've made quite a bit of money. Lock that in, protect that, and then consider and evaluate your risk based on what happens moving forward. All right, so I'm going to argue for the bearish case. Alex gets to argue for the bullish case. It's going to be fun. Let's do it in today's episode. So let's get over to the charts. This button right here, I do believe. Nope, this button right here. All right, so we've got the charts, we've got the chat. People are talking. I want to give a big shout out to, we got Mr. Hut QC in the chat, all the way from Canada. Good to see you, my friends. S180XT Crypto Jack is always holding it down. Asriel, you are correct. I was late.
It's my fault, guys.
I was working on improving the mining algorithms you're going to use one day to become super rich. Only the best. Stun Gun Smiles, Jay, Blue Box Territory, Peckham. Who else do we got? We got Delta Broy if he wants to see ERDL Rond. Do believe did we take profit on that last night, or are we still in Elrond? I'll have to double check.
I hope we didn't take profit. If we did take profit, then I want to re-add because Elrond looks like a beast.
Yeah,
Elrond's
like
an absolute beast.
Shout out to shoot, I'm sorry. I know there's a premium member that's super in Elrond, and his name escapes me right now at the moment. Come on,
is it Storm? I feel
maybe it's Storm. It's one of you guys. There's about like 4 of you guys who are like super into that. So shout out to you. I apologize that I can't remember right at the time. We've got Mr. D, Caprica, and a bunch of others. York, good to see you as well. Robert, good to see you as always. AJI, Dark Rico coming in from D Live, Dan, Robert. Oh yeah. So okay, hold on a sec. We got to figure out where the echo's coming from. It's probably
right now.
yeah, it's probably coming from my mic when you talk. So when you talk, I'll have to mute my mic. I'll have to remember that. You guys stay on top of me. I mean, I have to pull my little mixer a lot closer. Okay.
I'll have to start raising my hand like we're in class. Can I speak, sir?
Can
Sir?
is it my turn to
Sir?
speak? Could you guys please work out the issues? How dare they call me while I'm on stream? All right. Storm has told you not to sleep on Elron like 5 times. Don Cannon says, whoever that guy is that echoes when he speaks, that guy is responsible for your financial successor. Let's see here. All right. Let's break this down. Let's do this fun style. I'll take Bitcoin. I'll do my analysis on it, and then oh shoot, we didn't do the thing where I gave him the screen. I guess I could just flip this around and give you the thing. How's this gonna work? Darn, I didn't think this through. I did everything. I set up his audio. I set up his. I set up the video. I set up the webcam. I set up the microphone, but I did not give him the screen to interact with.
Well, I mean, sure, I'm right behind you.
We could switch seats. Yeah, that gives me a chance to walk around. Yeah. All right, we'll just do that. Yeah, we'll just tag off. All right. Anyways, they have they just made a massive order of Bitmain ant miners. Yes, I ordered them. And over to you, Alex. All right, so let me break it down how I see Bitcoin kind of evolving here. Again, we have not made a lower low. So if we're looking at price action, price structure, again, this is the argument that I've kind of made all week. And my trading is, again, my personal decision making is influenced by several other things, right? And it's overall, as I've kind of expressed, I've been doing this for a long time. And the reason why I've been able to be successful in this space and not burn out when the majority of individuals who enter into trading are able to be successful in short bursts of time, be lucky in short bursts of time. But as 2018 taught many individuals who are watching the show, the difference between getting into good trades and then translating that into sustainable profit, or translating trading into a process of sustainably extracting money from the market, right? Is not as easy as getting into a good trade. It's having a good entry, right? You have to manage your risk. You have to manage your exit. You have to allocate your capital. You have to preserve that capital. And it's very easy to make money in a bull market. It's very difficult to preserve that wealth when everything is tanking. So that's obviously what I specialize in. That's why many people come to the group. Risk management, capital management, hedging. These are some of our most popular concepts. And you often won't see, as you guys know, there's no technical indicator out there that's going to tell you when the exact top of the market is. You can look for statistical probabilities. You can look for patterns to repeat. You can look for setups that you like or that you have tested and seen to work for you. But sometimes, perhaps the best decisions, sometimes the worst decisions, often come from just trusting your experience, looking at what's going on in the market and deciding, you know what, hey, I don't know. I don't have access to perfect information, but I certainly do know when I feel that things are getting a little frothy. And it's okay to take a step aside, preserve and lock in the wealth that you've made, come up with strategies to do that, and then just wait. If something is, if the market broadly is going to go up another 500%, 600%, 1,000%, things are going to continue going on and making new highs. Well, then that means that you have plenty of time to wait. I guess there are a few things, and I talked about this yesterday, that concern me about what I see. And one is whenever you start seeing a couple things. One, the broader market believing like, okay, this is easy money, doesn't matter what you buy. Well, people feel like it's just too early, right? Like the bull market in cryptocurrency hasn't gone on that long, that feeling is not justified. Well, in my experience, it doesn't really matter how long it's been sequentially, like through time. It only matters when that feeling comes in, because that feeling only tends to come in at the top or near the top, or when it's super frothy. So that's something that concerns me. And again, doesn't mean the market can't continue going on, but it gives me a little reason for pause. And two, it's when this idea that, well, this might be it. This is the only chance I have to buy. This is the only time to get in. If I don't get in now, I'm going to miss it. That's never true. It's never been true. It's true for things that aren't really kind of worth getting in or way too risky to get in. And again, you can take a lot of risk with small amounts of capital. And, shout out to you guys who do. I do as well. But in reality, things that are really, really good investments, things like Bitcoin, for example, from 2011 to 2016, you had plenty of time to buy. You had plenty of time to do your research, to allocate your money, to come up with a strategy, to fully understand what it was that you were putting your money in. You had plenty of time. It doesn't matter. You never miss the bus. If something's a really good investment, it doesn't matter whether you buy it at a top. It doesn't matter whether you buy it at a low. You buy it because it's quality, and then you wait. That has one of been just time tested great strategy for any market. And you use the discipline that you incur from frequent trading like we do to be able to handle that wealth, to deserve it, to preserve it, and to actually lock it in and make it improve your life. With that being said, on the daily, we haven't formed a new lower low, so I understand individuals wanting to buy the dip, and that is still technically valid. Even on this PTP strategy that I've been showcasing for the last month, we are above the baseline, which means individuals are right to be looking for dip buying mode. Okay, I'm not doing that. As I've said, I've moved my capital into a hedge, particularly with Bitcoin. I've used MakerDAO to die up a good chunk of my Ethereum, and I've lent that out on Compound because it's an easy way to earn a little bit of yield. Not, I wouldn't say like the best way to do it, certainly, because it's not as easy as 1-to-1 DAI, Ethereum to DAI. But anyways, as I said, Bitcoin, when we had this red candle on the 25th, I said, guys, I don't think this is the area to short. As I said on stream, I feel like we're going to pop back up to about 11.4. I even could see price going to 11.7. Hell, we might make a run for 12K. Now, the first has happened. We did immediately pop up to 11.4. It's where I began putting my first hedge on. Price pulled back down to the lows yesterday on the doji, and we are now attempting to make a new high over that doji. We haven't done it yet. Price trading at 11.521 over on Finex. So again, it seems like we're going to try and make that run to 11.7. It's going to be the second area that I'm kind of interested in hedging. And we'll see if we're going to try and make that run to 12K. Now, if we're able to get price accepted up above 12K, we have to reevaluate because that does show a sign of strength for the buyers and that they're kind of holding down the 12K price level. And we're going to have to take some long risk exposure, which again, we still have. We just have to offset some of our hedge. But the hedge, again, just is offsetting and locking in profits that we made on the way up anyway. So very kind of market neutral strategy, just very kind of a sustainable way to do things. So not worried, just very calm. And I'm in a position where I can sit back, evaluate, and really kind of make a decision for the next few months or weeks. So that's about it on the weekly. I do want to point a few things out, and then I'll stop talking and hand it over to Alex for a few minutes. Let's see here. On the weekly, again, things aren't necessarily showing signs of a strong reversal here. So one reason to pause, we did kind of reject from that $12,000 psychological level here on the weekly, as you can see with the doji. Doji doesn't always, it's not a rejection candle, right? A doji is an indecision candle, right? It's Justin's cold brew coffee. Yeah, man, like gotta wake up pumped up. But listen, he doesn't have his bright light in his face. And yeah, I don't know, like the camera turns on and get amped up. Anyway, so here on the weekly, yeah, it's a doji candle. It's not a sign of a sharp rejection. It is Friday. It's profit taking day. We're moving into the end of the week. So we are going to be looking like we're going to close another red weekly candle. These things aren't the strongest signs of rejection, but they are certainly signs of caution, right? Certainly on this time frame. I want to point out
a lot of bearish momentum.
Yeah.
So, but I mean, but it is you see wanting bullish momentum before the rejection, and that's where I'm really given pause. It's not really the bearish momentum per se. It was the lack of bullish momentum.
Yep, I do agree. And even listen, so here's some, as you kind of pointed out, blasts from the past indicators that we used to use all the time. Let's look at TD sequential, right? We're on a 6. We did have the aggressive 13 sell just 5 candles ago. Now, that does, getting the aggressive 13, again, the TD sequential I really like. It gives you a good idea of where we are. It can be a very, very helpful indicator, but it's not, I wouldn't say it's that its signals are the best, right? You have to use it with a little bit of nuance. We are on a 6, and that's not the usually the way that I utilize TD sequential. Several ways, particularly with TDST. But when you get to a 7 of 9, it's kind of a good time to start considering taking profit. If something's been moving up for 7 weeks, you know, it's a good idea to start scaling out, right? Just take some profit. Said the mic's no good with your hand on it.
All right, how about this?
I understand you guys can't hear us. We're just troubleshooting the mic.
Testing, testing. All right, hey guys. Did anybody actually hear what I said about the weekly bullish momentum? Okay, basically what I said is that the what really gives me pause is not the bearish momentum off of 12K, which honestly there's not a lot of bearish momentum, but it was the lack of bullish momentum coming into 12K, where we just sort of like came up to it and smaller weekly candle, smaller, smaller, then kind of we kind of crested and reversed from there. That's what really gives me pause about that particular price action rather than any particular bearish momentum in the red candles per se. Wait, they said I'm getting nopes.
No. They're good.
Oh, okay.
I think Don Cannon is suggesting some perhaps infidelity on my part. So
I think I just muted it.
yeah, you're good. You're good. Yeah. Let's see here. And yeah, so we can look at. I agree with what you said too. The with the doji, there's not the sharpest signs of rejection on the weekly. So again, certainly suggestions here that we can have a weak pullback here. Potentially even like 10.6 is fine. We could still hold 10.6 and still be roughly in a bullish mode. Now that is a pretty steep pullback. If we get down to 10.6 and we show signs of stopping, again, that will be a good risk to reward to look for a that will be a good risk to reward ratio to attempt to buy that dip. The reason being is because unlike with normal trades, for example, with a baseline as your early exit or fail-safe system, where you do kind of have to wait a while, i.e. lose more money to know that your trade is wrong, with something like a reversal baseline bounce or reversal within the trend at that low distance and that proximity to the baseline, you don't have a lot of distance to be proven wrong. So it only takes a day, only takes a few days until you know that you're wrong if the trade is going to be a loser. And again, I've been doing this for such a long time. Kind of the complaint or one objection or one fear that I might hear is, well, what if you get that massive red candle down through the baseline? That may happen. These things average over time, but more often than not, what you will get is a smaller candle. I mean, objectively, the losses, the P&L losses, the dollar losses on reversal baseline bounces when those trades bust is much smaller than, let's say, an initial trade or an initial signal that hits its stop loss. Yeah, so we'll keep you updated on this. Again, going down to the daily. Going down to the daily is kind of interesting as well because we did have an imperfect 9 on yesterday's candle. I pointed this out last night. If we look at the IFT, RSI, and Stotch, which are inverted Fisher transforms applied to those indicators, those were indicating oversold conditions. But again, when I look at those things, particularly the IFT, RSI, it's not actually, it's unlike the regular RSI where when something goes oversold, you kind of want to buy that. Very similar to like bottom feeder. With IFT RSI, it's more like when it goes oversold, it tends to like stay pegged down there. Now, once in a while, it'll pop back, but it tends to stay pegged down there for quite a while. So just keeping an eye on it. The Liqueur certainly not indicating a bottom. So just keep an eye on it. It's an interesting area. It's a good dip buy. So shout out to anybody about the dip and is going to take profit on this. If I were, if I did have long exposure here, which I don't at the current moment, I would be looking to take profits around 11.5 to 11.7. I'd be conservative with this particular trade. It's fine if you guys kind of want to swing for it. But I do want to point out just kind of the different philosophy in profit taking for kind of range bound strategies, right? So for example, like this would certainly be a range bound strategy, right? You see resistance, you see support, price seems to have bounced off support. Often the mistake that people will make, and sometimes they get lucky, but more often than not, they don't. One problem I see people have or apply when taking range bound trades where they buy low and try to sell high or sell short the top and sell is that they don't consider that the better strategies, for example, the ones that desks or firms will run are reversion to mean strategies, which means you don't buy the low and attempt to target the high. You hope for that, but your plan is to buy the low and distribute right around the mean, right, the middle of the range. Which is going to be 11.5 to 11.7. So good area to lock in some initial profits and just be a little, definitely not guess. Well, I used to have 4 chairs in this office and then like nobody would come over here. So I was like, what are these chairs doing? I trip over them, like, get them out of here. Now my garage has 4 chairs and nobody comes over to my garage. Moving on. What do you think, Alex?
The chair's not that bad. It could use some more padding. That's what I think.
That's my. I don't know if you guys can
Yeah,
see the drum. Well, they can't see the drum set, but that's what I sit on to drum.
Oh,
That's my drum.
I
That's
could
my
move
drum.
that. There's a
Thread.
drum set over here. There's electronic drum set. You guys, you think he gets out all his stress while venting on screen? No, he's got even more stress. This is drum set. Yeah.
Jordan Stotts. Listen. I'm open to new friends. I like the friends that I have. I have great friends that they don't come over to my house. They don't eat my food. They don't bother me. They don't ask for money. Well, I mean, most of them. Saying, just kidding, bro. No, it's just this is where I live. I live kind of. Listen, I live in a small state. I live near a small town, and it's the way I like it, man. I focus on my kids. I focus on my family. But I've my entire life I've been pretty different. I would say pretty different, or raised different, or just think different than just most of the people around here. Most of the people I meet in common, just common polite society, right? I'm interested in different things. I think about different things. I talk about different things. Like the way that I talk and the things that I talk about on the show is the way that I am in real life, because this is who I am. And just most people are not like super into that, right? So, I'm gonna play Stairway for you, bro. Okay. Do you want to grab the Bitcoin chart or do anything with it? Do you want to like swap up? Yeah, but come on over here. What I'm gonna do is take him off.
Do you want to keep me on this mic, or are we gonna use
No,
that mic?
no, just screw that thing. I'm just gonna do this like freestyle. And Jack's gonna just watch like, man, you guys are. I can't believe this. I can't edit this. This is terrible. And take that off. All right, it's all you, man.
Good day, folks. My name's Alex. I'm going to be your Justin Wise. So, what do we got here? Oh, yeah, we're looking at the Bitcoin chart. Do this thing. Lower time frames this. Okay, so as you guys know, yesterday we had this really fucky wick on the lower time frames where people it seemed like people we got shorts squeezed right here. I know I'd been short from 11,740. I managed to grab a short right around here before we dropped. I've been kind of holding it most of this time. I took profits along the way. This is in my own personal account. And I managed not to get stopped out on this because I wasn't near my computer, because this is a very scary wick for lower time frame trading. But now we've bounced off of this order block again on this lower time frame order block, just right around 11,000. You see here, area, a little horizontal line right there. Yeah, we've bounced off this area again, and I don't know. We could end up putting in some bullish appreciation right here. So I'm tentatively watching, and if we can close, this resistance right here, if we can close back above this support now resistance, then I would be maybe interested in some reversal swing longs. I'm not there yet. I'm still short. I know that I said price looks bullish and stuff, and it does, but that doesn't mean that I need to be scared out of the position that I'm in, and I protected over several days right here. So Justin's right. If it turns out that things are really bullish right here, no, we've got plenty of time where we can hop into a long right here. We can hop in right below 12K or right above 12K, or we can or we can hop in above 12.4 right here, and at that point price is likely going to keep going, and when it hits 14K or 20K and stuff, it won't matter too much whether we entered at 12K or 12.2. So yeah, I think that's where we are right now. Is Bitcoin has been mostly trading sideways. As scared as people have been that's going to pump or that's going to drop, we were the same price a month ago here. So don't be first of all, zoom out. If you're trading lower time frames on what has become an increasingly lower volatility, be a little cautious here. And and I think right now is not the time to take massive reversal longs or really reversal shorts here, because I'm a little bullish, he's a little bearish, but previously I was bearish, he was bullish. the market's in flux. You know, things aren't entirely clear right now, and you know, our crystal ball is going so far. So be cautious here, guys. I think that's really all I want to say on Bitcoin. Ethereum is about the same, only it looks more bullish because the Ethereum Bitcoin pairing is also pumping while Bitcoin pumps. So the two of them is kind of a magnified effect. Ethereum up like 3.5% today on top of Bitcoin's 1.5%. Want me to turn it back over to you for a little bit, Justin? All right, guys. Gonna be at the other cameras or the other camera cell.
Yeah. Okay, so he said kill him. Boo. Judas, pull the mic closer. Cast and catch, crypto edition. All right, let's do all right, so we talked about Bitcoin. I did grab some gum. Let me know if that bothers you. It's gonna bother you. I'm just gonna spit it out. It's not natural. I shouldn't do it. It's weird. I get it. It's like violating the social contract. All right, anyways. All right, so good stuff. Good points. Yeah, and I agree with a lot of what you said. I mean, the fact, A, we have plenty of time. B, the market is overall just objectively ranging. We haven't formed a lower low. We're pushing off the bottoms here. If I had to give any advice to the speculators and traders out there, echoing what he said, you know, just understand with the low volatility and kind of with where Bitcoin's at, just be a little cautious, right? Think about it, zoom out, think about overall your long-term positions, consider taking profit, and just, you know, be patient and cautious and be a little more conservative with your entries. Let's see here. So with that being said, we talked about Bitcoin. Let's go over and look at a few data points that I think are interesting. Market dominance. All right, so market dominance is going to be, let's just take this off. Boom. Market dominance is always an interesting bellwether. As you guys know, market dominance has been in a pronounced downtrend for quite a while now. Who is this man? Market dominance has been in a pronounced downtrend for a while. Now, I tried to, I talked about dips and making new lows. And when we make new lows, we tend to resurge. And several things happen that are interesting for tradability when that happens. So, for example, we can see market dominance making a new low right here. And then what do? We get about like 3 or 4 days of upside. This is not the strongest example right here. But then we continue the downtrend, make a new low, where we do get a more impressive bounce here. Here we again, we make a new low, get a bounce, we make a new low, we get a bounce. And now we are doing something that's, I think, a little bit more interesting. As you can see, kind of the tightness of this range, the compression of this range is Don Cannon with the 20 crones. He says, pull up the 1 minute chart. I want to see that long-term analysis. Come on, man, please. 100x long, man. Just set that stop tight. Thank you, my brother. Appreciate the support and the revelry. And I think it was you who sent me that bottle of gin. I mean, it's got to be you. You're the only person. Waiting for you to come on over. We'll drink it together. But as you can see, we formed a new low here. So again, if history repeated itself, we would, and we did, get a slight bounce. But we don't have an immediate continuation of this downtrend. An immediate continuation of this downtrend would suggest, I mean, obviously, and would be seen by alt valuations increasing exponentially, which I want to say that we've seen, but I would argue that we haven't, right? We've seen largely over the last few days, like red days, and we've seen for the majority of the week, a mixed bag of green, like a mixed bag of green. Today, now, obviously, Bitcoin moving up, we are seeing a more green day broadly because that is the standard case. If BTC USD is moving up, pretty much everything is moving up as well. It's a bellwether for the entire market. But market dominance here is interesting to me. And it might, again, because I'm cautious and conservative, it might signal a potential reversal, just something to watch, right? Because this is the first time we've popped up, put in a week of about sideways, just really range. Like there's no pronounced highs, there's no pronounced pump here. It's just really almost legitimately sideways, which could be considered a sign of strength, right? Particularly if we dip down here a little bit and form a higher low and then begin pushing up from there. That would tend to suggest that money is flowing out of alts into, into BTC or potentially USDT into BTC for whatever reason. Now, often you would think that that is bullish. It's not always. It's not always bullish, right? It's not always bullish. Several scenarios can happen, right? So, for example, profit taking can occur on altcoins, which generally profit taking happens on a wide range when prices are very, very high. Prices are very, very high on altcoins right now. And then that money flows into Bitcoin and then out of Bitcoin into USDT or in the form of leveraged shorts, which honestly, for the vast majority of big money out there in Bitcoin, they don't sell into fiat. They short, right? They use futures to utilize their shorts. In fact, it could be considered on a particular social scale that some of these platforms exist as alternatives to moving into fiat for these for many individuals. Why have my Brussels sprouts gone up $1? Inflation, is it just beginning? Yeah, we're going to talk about the Fed, inflation, and the story that makes you smile more. I smile all the time. Let's put it this way. It's interesting to say the least, and I want to thank Alex for giving me some cool thoughts on that. Anyways, so any thoughts on? You can put your headset on. Sorry, I took you away.
Okay.
I should have put you back on. Hold on just a second.
It's
Here,
a little awkward having me like sideways. And I'm still not like sure about.
you're beautiful, man. You look great. You look great.
But what was
Your
the
headset.
question?
I don't think your headset's on.
So what was the question? What was the thoughts?
about?
I think what's really interesting is if we go to crypto market cap excluding Bitcoin.
Okay.
So that'll give us an idea of what's going on only with like the entirety of the alt market, including Tether.
What's the
Total 2. So total is crypto including Bitcoin. Total 2 is crypto excluding Bitcoin. Yeah.
We've got some bottom signals.
Yeah.
We didn't break. Not the bottom on. Not nearly a bottom on ISIS.
That's what it kind of looks like to me on my chart right there. Yeah. I did lose my light.
It's the plugin.
It's probably the button again. Hey, all right, guys.
Technical difficulties.
That's how you know it's live. That's the good stuff. Oh, he said Mike Justin.
Yeah, I know.
Oh, okay. I don't know if you saw it.
It's just he does look like, well, he is a former Calvin Klein model. You've seen this man on the cover of many magazines. All right, let's see. Yeah, this is
that. Yeah.
yeah. I'm gonna say I agree with you. This broadly looks like the Bitcoin chart. Again, just attempt to make a higher high.
Justin,
Rejection.
audio.
My audio's on right now. Trust me, I'm way faster than the guy.
Okay.
I'm way faster than the guys on the stream.
All right.
Yeah,
You were
I'm
wrong,
like,
Wally. You made me look.
no. It's not that they're wrong. It's
Wally.
that they're just like 15 seconds off, right? So.
Okay.
Yeah, so I agree. We see the same kind of pattern here with Bitcoin. So this is the entire market cap, excluding Bitcoin, yes. But it looks just like Bitcoin. Attempt to make a higher high. Market capitalization's pulled back, not massively, not violently, right? So again, this could be pullback to continuation. But one way, as I continue to trade, one way that I tend to look at the market is like, price, and this is what I say in PTP. This is the ethos. This is the philosophy of a trend following trader. Price and only current price tells you really what's going on. So if you just look at price in that lens and say, okay, well, what is price telling us, like that the market participants are doing? Well, they're comfortable keeping the market capitalization this low. They're comfortable with this amount of valuation in the market. And what is it telling us right now? Okay, well, price, they were comfortable taking money out of the market. Okay, and that has stopped to a degree. So they're pretty comfortable with this level of valuation in the market. I would suggest that if we dip down lower, you're going to see classic signs of, breaks of support, breakthrough, breakdowns, things of that nature. So although we do see some bottoming behavior here, and it makes sense, I want to see more signs of strength. And that's very similar to Bitcoin, where I do want to see, price up and accept it around 12,000. I want to see the market accept that. Then we got to consider, okay, well, then the risk to reward is certainly here for taking price to the upside. Let's bounce somewhere else. I want to go down to the 4 hour and give Mr. Jason certainly his due here. And I do not have any more the pattern here. But yes, Jason posted some fantastic analysis comparing, this particular fractal in 2019, which did lead to a continuation of the bull market. Broadly here, there's elements of an ascending triangle, and then broadly an area of the pattern that I like to watch for. I pointed this out, where you've tested resistance multiple times and you form a higher low that is greater than 50% of the range between the high and the low, and then you break to the upside. And even we get a beautiful BPC here, which is an opportunity for reentry on a breakout. And although we don't see the perfect fractal right now, again, the elements are there. The shelf that's holding, price coming down, attempting to form lows, not forming it, hitting a double bottom, and price appreciating. Now, this is a pretty gnarly little rejection here so far on the 4 hour. Nothing, again, we haven't formed a higher high on the meso timeframes here. We haven't formed a higher low on the meso timeframes here. Just a bit of a double bottom and kind of a W pattern, which W patterns tend to get faked out more often they go right in hand with like in head and shoulders and inverted head and shoulders, because the W pattern is just it's an incomplete inverse head and shoulders, and I do not find that those play well. Double bottoms tend to work well. Adam and Eve's, which is a double bottom pattern, tend to work really well, especially on higher time frames, for certainly. Like if you go back and look at just about any altcoin chart, and you waited for a very, very bearish trend, price to move down quite a bit, and then to watch price move sideways for at least 2 months, you're going to see a double bottom of some form, generally an Adam and Eve, a V shape followed by a rounded bottom that forms a higher low, and that almost always, or at least very, very, very successfully indicates, well, we are probably in an accumulation zone. So if I'm looking for something to put money into on Money Mondays, maybe charts to look like that are not a bad idea. Peckham says Tone Vase looks different these days in Discord. Wow. I don't know if that's a slam on Alex or a slam on me. Let's see here. CNMT says he just sold a huge bag of OXT. I believe that's Orchid for twice what he purchased it for. Hope that was a good move. Well, depending on, I mean, yes. Congratulations. You entered into the market, you purchased something, and you sold it for twice it was worth. That is something that you typically have to wait 5 years for it in the stock market.
Yeah.
10 years, 15 years, sometimes 3 days in
Or
cryptocurrency.
sometimes if you buy during the middle of a pandemic, then you see your money double that way.
Just overnight.
Wait, is
Crazy.
this microphone on?
It is.
It is. Okay, it's not supposed to be.
Let's check out. Okay. Let's go to the hourly here and just see what's going on. Put on my kind of modified setup here. All right, these are getting in the way, so I'm gonna take those off. All right. Anyways, down here on the hourly, kind of looking at the LTFs here. Yeah. So as I've said, there's a bigger range that we're trading in, and then there's this current range that's evolved over the last, let's say, 48 to 72 hours, with our lows and kind of support around that $11,100 area, and current resistance right around 11,600. In my setup, in my hedge, I had talked about, again, positioning around 11.4. That's where my average entry for my hedge short is. And I have orders set up in the 11.7 and even just a little bit higher. I think my last one's at 11.85. I am going to, as I said, if I see price not just up at 12,000, I want to see acceptance at 12,000. That's where I'll consider reevaluating my plan. But as for right now, I'm not too concerned about it. A little bit of rejection here on the hourly. 2 good bearish candles. So just intraday, for those of you trading intraday, the things I'll be watching for and what I'll be watching for, but I'm pretty happy with my positioning. I'm not going to be too active. As I said, I'm conservative. So I'm largely risk off in the market. So, I've put, I decided I'm not cashing out all my Ethereum this time. I haven't been as supportive of the Ethereum ecosystem. I've been researching more and more about how to be involved with decentralized finance. So again, some of the things that I'm doing, I've added to that. Not only am I still providing liquidity to Uniswap for the pairs that I'm holding, but 2, I now am actively involved with Ethereum collateralized into DAI, which I've moved over to Compound and I'm lending out. So pretty cool, really easy to do. The only thing I have to say is, like, guys, you really want to be. It depends on how much capital you have, right? Like, for example, transaction fees on Ethereum are like $35 right now, and it's probably going to get worse. And I think it's what, like 30%, maybe it's 40% of Ethereum nodes have been knocked offline due to syncing issues. And Geth is the only, like 80% of clients are running Geth. I'm concerned. Like there is, Ethereum's been around for a long time. People think it's solid. People think it's stable, and it is. But when 80% of clients that are mining are running, when 80% of miners are running one client, Geth, and there are vulnerabilities being kind of discovered each day, and there's never been a greater time to exploit vulnerabilities with all of the money in the Ethereum ecosystem. You just want to be a little careful. And also, it just might not make sense if you're only putting, $200 into something to pay a $35 transaction fee in and out. And perhaps, like, for example, with MakerDAO, you have to do it 3 times. You have to set up a vault, you have to deposit the DAI, and then you have to collateralize the DAI. So it's just something to consider. But it's cool, and it's a great way to be in the ecosystem and just support the space, guys. Can you do a static video for, say, $350 for DeFi? How to DAI to comp? Yeah, sure. It's super simple. I mean, I could show you literally right now, and then I can make a longer video. So, you're gonna need MetaMask or some other wallet that has some integration that you can interact with these dApps for. There are different ones, but MetaMask is certainly going to be the easiest. That's what I utilize. I use MetaMask connected to my Ledger Nano X. So super simple, very easy to do. So once you got that all set up, you need to go to oasis.app. Okay, you go to oasis.app. This is MakerDAO. Boom, hello, sweet, awesome. You'll hit borrow. I will look at Polkadot. So here, okay, so I'm gonna have to actually do it not on this. I don't have a MetaMask connected to this browser, but just in general, you'll hit connect wallet, select whatever wallet you have, more wallets, 3. It'll probably automatically detect yours. You'll connect it. You just hit connect. I think it might cost like, that only costs like $1, or maybe it's free. And then you'll just, you'll select set up a vault. There's a button that says set up a vault. You'll set up the vault. That's going to cost $35 or whatever the transaction fee on Ethereum is. Takes about 10 confirmations. Boom, it's done. And then you'll select what collateral you want to put in. So if you have Ethereum, you can put in Ethereum. If you got BAT, you can put in BAT. If you got USD C, I think you can put in USDC. If you got DAI, you can put in DAI. You can put in like 8 or 9 different types of collateral. So you select that, you deposit it. That's going to cost a transaction fee. And then you select how much DAI you want to take out. Now, it's not as simple as like if you have $100 in Ethereum, you get $100 in DAI. It doesn't work that way. You have to be 150% collateralized. So you can only take out, that remaining difference, right? You can only do so much.
Yeah, like you can get $400 of DAI out if you put in $600 of Ethereum.
Give or
Because
take.
you have to be 150% of what you're taking out.
Yep. So you do that. You select the amount of DAI you want. Now, what I've done and what I recommend, you're going to have a liquidation price, which means if the price of Ethereum drops to your liquidation price, you're going to lose your Ethereum that you've put into the MakerDAO contract. So you don't want to do that. You don't want that to happen. That's the opposite of what you want to happen. But that means you're going to need to put in more Ethereum than you really need to, right? So I recommend, to be very safe, at least 250% collateralization, right? At least, right? You can go higher really if you want. But, and again, it depends on like what you're really doing with Ethereum. If you're doing it to hedge, it's an imperfect hedge because you're going to be missing out on a lot of capital, right? So if you've got $10,000 in Ethereum and you have the option of just selling $10,000 into, let's say, USDT or cash, or opening up a 1x short to hedge it, those might make more sense. But if you want to be involved in DeFi and enjoy the ecosystem and just at least get your feet wet, you can take a chunk of that, lock it up on MakerDAO, pull out your DAI, and then what you go do is you go over to compound.finance. Compound.finance, hit app. It's going to pick up your, boom, you just hit MetaMask. It's going to pick it up. And then you just say, what is it? What's the button? Rough. You'll see your options here, and you'll have the ability to click, insert DAI, the amount of DAI, and boom, and then you just hit loan this out. Now you're loaning out the DAI on the compound system, earning interest. It's low. It's about like 3.06%. It's gone down from 3.67 over the last 2 days. But which is, by the way, you can like earn higher yield at that. But it's just done. It's done. You're automatically going to make money. You can do what you like, and then you're involved in the ecosystem, right? Alex, you were telling me something really interesting yesterday about Compound. And again, it's maybe not the hottest or coolest thing to do right now, but it certainly is. It certainly is a cool idea about utilizing Compound to hedge. Do you want to talk about that a little bit?
Yeah, sure. So I heard a little bit about this originally in 2019. If you guys remember, until very recently, there was almost no way to short alts in this market. You had the BitMEX alt contracts; those were the big ways to short alts for quite a while. There was the BitMEX alt contracts. There were a few markets on Kraken that you could short up to 5x, mostly 3 to 5x. There's XRP, Bitcoin, and a few other ones there. But really, if you wanted to short any of the alt markets, you were SOL. It was mostly it was like spot. You could do spot Bitcoin, you could do spot ETH, and there was perpetual contracts. That was about it. Now we have FTX perpetual futures, and there's a lot of alts you could short there. And we have Binance spot and futures, and there's a goodly amount that you can short there. But there's still some markets that there's no way you can short that particular alt market if you wanted to, unless you use decentralized finance. And what you can do is you can take your Ethereum, lock that Ethereum up in let's say Lend, but you could use some other protocol. So let's say you lock it up in Lend, and then you borrow let's say basic attention token, because I don't think there's anywhere you could really short basic attention token if you wanted to, except this way. So you borrow the basic attention token that you put up the collateral for, and then you sell that right away on the open market. Well, you have just gone
Just to clarify, because this is where I was like, wait, on a centralized exchange,
yeah,
like just anywhere you can go to
I
actually
guess you could
sell
go
it,
sell it
gone,
on
done.
Uniswap if you want to, but it doesn't make any sense necessarily to do that. You wouldn't have to. You could just sell it somewhere. The idea is you want to pull your collateral back out because you're going short BAT. You think the price is going to go down on BAT. So right now you owe the smart contract like 500 BAT or something like that. When you sold it for $100 worth, you sold $100 worth of BAT. Price of BAT comes down 20%, and you buy 100 BAT for $80 now. Fantastic. You go and you give that back to the contract, you get your collateral back, and you have made $20, that difference between the 80 and the $100, by shorting basic attention token. And what you did is you did like the very old style of shorting, where you actually take collateral, you borrow the asset in question, you sell the asset on the open market, and then after price goes down, you buy the asset back and you return it to the person you borrowed it from. Thank you. Here's the item that you borrowed it back from me, and you make money off the difference in price. And either that person, they lost money on the deal, or maybe they've got a longer time horizon and they just don't care because it's the same to them as if whether or not they were holding it. But yeah. So that's why you can short using these functions. So something to think about.
Yeah, that's it's really interesting, because that is literally what happens when you short. That is physical delivery. That's how you short, via physical delivery. Mm-hmm. And we've become so cash settled and so digital that a lot of people don't even understand what it means to short, like what is actually happening behind the scenes. But that's what happens. Like that's what's going on. And I think understanding that really helps people I don't know, feel more comfortable about what they're doing, or how shorting actually works. It's a very simple process, but yeah. So cool way to get exposure to things that you otherwise might not do. All right, so let's look at what you guys want to look at.
Orchid. Someone really wanted to see Orchid.
All right,
someone really wanted Orchid.
All right, as I said, DeFi perp making a new high. Let's see here. It's like Bitcoin back in 2017. It just doesn't stop. Let's look at, it's probably going to have more price discovery on Bittrex, right? Again, Orchid, just from personal experience, Orchid, a project that was at San Francisco Blockchain Week, as I said. If you guys want a good idea of what's going to pump in the next 18 months, maybe it's just coincidence. They were all at SFBW 19. And Orchid threw a pretty cool party. Decent team, met them, good project. And yeah, I'm not exactly sure. Well, I guess I do. Coinbase, and this is why. Coinbase is why. So Orchid launching, and one thing I want to kind of point out, right, is I feel the need to say it, like getting an Orchid, right? You guys, like, it's very easy to not know. Look at that. Somebody was aggressive. It's very easy to not know like where price is going to go. So I entreat upon you guys this. There's no crystal ball. There's no magical way to know what is going to pump, what is not. You can do your best, and you develop a strategy so that you're more right than wrong. This is like the basis of what we do with our trading strategy. But when you are looking to get in any market, very, very large gains, there's really only way to, like, if you want that trade that's 20x, if you want it that's 10x, if you want it that's 50x, whatever, then you have to buy and hold, right? You have to buy and you have to wait, right? You have to be strategic with your buying, and you have to be disciplined with your selling. Now, you're never guaranteed success. You're never guaranteed to get the coin that you want, or that it's this, and you never know, like, if it goes up just a ton, well, do I sell it all now? You have to know all that stuff in advance. You have to have a plan. Otherwise, when you get in that moment when price is very high and you don't know what, and you feel compelled to lock in profit, you will make mistakes. It happens to everybody. Greed kicks in, fear kicks in, and if you don't have a plan written down, you are very prone to make a mistake that may cost you a lot, or embarrass you, or just suck in general. Good example, I was talking with a friend the other day, somebody that knows how to trade very well, and they had taken on a position size that was too large. It was just too large. They should not have taken on that position size, and they knew that. It was not in their plan. It was not in their strategy, and they were down quite a bit. They were in drawdown.
That's not what happens. I don't think most people don't go into a trade and say, I'm going to get myself so caught up in this trade that it's like all I can think about because all my money's on the line with this trade. I don't think anybody enters like that thinking it's going to be that way.
Yeah, it's always. I mean, just speaking from personal
It takes like
experience,
30
like,
seconds to make a mistake, and then suddenly you're in too deep.
yeah, just in my personal experience, and yeah, I know for just about everybody as well. The mistakes that tend to hurt the most are often made like flippantly, right? Just for no reason. You're like, oh, I'm just going to add to this position when you don't normally add to positions. You don't have a track record. You haven't back tested adding to positions, but you just do. And now all of a sudden you have way too large of a position, and price has gone down against you. Price has moved against you, and now you're in 4 or 5 times as much drawdown as you should be, right? To the point where if you lose this trade now, you're gonna have to stop trading for a month if you're smart, or you're liquidated. And guys, it just happens like that. It's not, you don't think out your mistakes, you don't think out your screw ups, and it happens in life. It's not just trading. It's you just tend to do little things. It's almost like there's something inside your head that is just waiting for an opportunity for you to not pay attention enough to like grab your hands and make you do something just small and little, but stupid. So you got to be disciplined, and you got to do things the same way, or roughly the same way every single time, or pursuant to a common strategy. That's how you achieve sustainable success. I was gonna thread the needle here, but I think that needle has been tossed into the trash. All right, so if you want those large gains, you're gonna have to buy and you're gonna have to hold, and the only way you're gonna have confidence to do that is if you believe in what you're investing in, believe in what you're buying, or 2, if you have a plan, right? Having a plan, having it written down. So again, that's how I thread the needle. This individual didn't have a plan, didn't know what to do, and price went down far against that individual, and he held on to the position. Price went back up to a point where he was going to be far less in drawdown, and I think the plan should have been, okay, once I reduce this loss by 50%, I should cut my losses, right? Eat the L. And I hope he did that. So having a plan, particularly for when you're going to get out of a investment, of when you're going to get out of a project, of when you're going to get out of coin, is going to save you, because that's going to let you translate unrealized P&L into actual profit that you can walk away from and utilize to improve your life, right? So for something like OXT, right? And there's a lot we could throw into here. Like, for example, comparing yourself to other traders, wanting to sell the top. If you want a good piece of advice, write this down on a piece of paper and repeat it to yourself every morning if you're trading cryptocurrency, particularly if you're wading into these newer speculative coins. Again, I think that there's really nothing new under the sun. The majority of these projects are going to pump, they're going to go away, and then money's going to flow back into Bitcoin and other things. Like, listen, with every wave of like new projects, new innovations in the market, cryptocurrency is avant-garde. It's the front of the front. I am maximalist. I do think that Bitcoin, I'm not really a maximalist. I just know that Bitcoin is the most useful coin that exists out there, with the most with the most liquidity, with the most use case, that's being the most actively utilized. Now, there are now new projects and new innovations that are exciting. Like, I'm very supportive of DeFi. I think it's very cool and good and can improve the world, what they're doing. But as far as like picking the winners, like that are going to be 5 years out, 10 years out, you don't know. Nobody knows. Not a single person on the earth knows. You just place your bets to the best of your ability, and you're disciplined in your investment strategy. That's all you can do. And to the degree that you're disciplined, to the degree that you have trained and studied and put yourself in the spot to make the right decision and win, is the degree to which you will tend to make money. So having a plan, knowing when to exit, but repeat this mantra, write it down. I will not sell the top. I cannot sell the top. There is no such thing as the top. The top does not exist. The top is not for me. You're never going to sell the top. It's not there. That is not for you. You might get lucky, but there's no way to always do it. What you want to focus on is getting in and getting out at a good price and utilizing that money to improve your life. Most people don't. Most people get a lick, kind of come up, and then they end up throwing that money into trash, right? They're like, because they're greedy, because they want more. They want another 10x, another 8x, another 30x, another win. They want more luck.
Here's a story from my life.
Testing, testing. Yeah. All right. So yeah. So yeah. And so that account was 20x and then immediately liquidated within 5 minutes after I made the money that 20x'd it. It was awful. But I definitely that's one of the days where whenever I make like I don't think I've ever made a trade like that again where I made that much in such a short span of time. I mean, 20x your account in like the span of 2 hours, 3 hours. You're never gonna get that kind of volatility. And I, I don't know. It was just I couldn't believe it afterwards. It's like, why didn't you just walk away from your computer after a 20x win? I mean, just take a day off. Just like one day. Just take one day off, celebrate your win, and then come back and make some new plans in the market. You do not immediately need to take your wins and like put it right back into the market to like, double your double right away. That's normally that's how at least I get into trouble. I don't want to speak for anybody else here. So yeah. That's the statement of the great Mick, guys.
That's no, that's real talk, man. That's real stuff. It happens to everybody. It's something that I find in doing
Can't
the
hear
mentoring
Justice.
sessions. Yeah, like, bro, I'm 15 seconds out.
Alright,
I got this, man.
Sorry.
I am one thing I've noticed from the mentoring sessions is particularly when I ask people to just some of the sessions that we've had recently where we talk more. And again, I'm really, really sorry, guys, in the premium group that we didn't do Wednesday's session. Really, really needed to rest up that day and recoup. But for when people just get the chance to share like the mistakes that they've made, and we all have. There's not certainly this human sitting in front of you, because I'm not standing, but and Alex and the best traders out there, we have our horror stories, just terrible mistakes that we made. I was very, very slow to trading. I learned very slowly. I sucked almost the first 3 years that I traded. It took quite a long time for me to get good and proficient. And again, the only way that I became good and proficient was being disciplined and having a plan and really planning everything out, right? This is why I trade the way that I do. I'm not like a naturally gifted trader. I've learned, I've become more proficient because it's pattern recognition over time. And it's also just confidence, right? Some action right now, like a decision in this moment, is often better than procrastinating and not making a decision ever. So that is that's a good thing. So again, you guys know how I feel about fibs, but in the absence of any information, we're going to use some tools to give us a little bit more of an edge, right? So anyways, OXT pushing down here. I wouldn't say the best way that I like to see it, but a decent, good, like compressed range down. This doesn't really seem like massive market dumping to me, I must admit. And OXT extremely popular on after its Coinbase listing, and really kind of pushing up on its freaking moon mission, right? 64.22% candle just at the recent peak. And so the rejection hasn't been too severe. This isn't a 50% retracement. I'd say this is closer to a 30% retracement. Again, something I'm not really gonna mention it. So the only thing that I can really see is if we push back up, you got two options, right? My general mentality when buying a dip, right, is not necessarily to target. I said this earlier in the show. It's not to target new highs. If you buy a dip, you should be in range bound mode thinking, right? So you're going for like a reversion to the mean strategy, where if you buy something extremely low and you have a preset high, such as up here at around 70 cents, then you kind of know that a safe area to look to take profit is going to be somewhere right in the middle of that, right? Because things will often fall and then correct back up to the median, or pump and pull back down to the median before pushing off or crashing down or pumping up, whichever direction the market decides to go. So I do feel that OXT in that sense is pretty close to that mid-range, where for a trade setup, it gets to be a little risky. I'd like to see a little bit more signs of strength for continuing to take it to the upside. So that's where I sit on OXT. I'd be cautious if we break 37, then we'll probably go closer to 25 cents, which would be about a 50% retracement of that movement to the upside. However, a couple more days of strength. I can see price coming back up here to touch or test between 70 to 85 cents. And then ultimately, I think if we break that area, I'd be looking closer to $1.50, $1.60 for the next kind of leg up. Let's see here. Any thoughts here on Orchid, sir? You can talk about the chart. I'm going to go pull up and see if I can't get any data from sentiment. And then we got it. It's already 1:12, so we got to talk about the news at some point.
Poor Al on YouTube said he bought the dip on Big Lots, but I read it as bigots, and I was like, what? What's this guy doing? Yeah. Yeah. My thoughts on OXT are that it's a coin that's getting a lot of attention right now. It's on Coinbase. I know Dave Portnoy was pushing it, and it looks like just a healthy retracement in an uptrend. So I do like the break of the downtrend. If it could be a good area to enter. I think if you just set a stop right below the most recent low, it's a good place to know if your trade thesis is invalidated. So obviously, if you start making new lows, like whoops, downtrend is still activated, uptrend has not resumed, and you know to get out. And if so just 2 to 3%. You guys know the drill. Do your risk management. I think it's a valid trade on the table for OXT. Why do we even need to worry? Talk about how long? Like we just take out Quadrigo, put on a trailing stop after it hits TP2, and you're good on OXT. I think. Yeah. Says.
Yeah, looking at holder distribution, I don't see distribution. So
yeah,
OXT looks like it is not being dumped by the whales.
Yeah, I say go for it.
Good luck, guys.
Yeah.
Let's see here. All right. What do we got? What's next, brother?
RSR. We had a request for RSR.
Reserve rights. Another project that was at San Francisco Blockchain Week.
Mm-hmm.
All right.
I thought that guy was so full of crap. I did not pay enough attention to his project.
So I'm not gonna lie. The gentleman that was there.
Yeah.
I enjoyed talking to him, but I did have the sense. I was like, I feel uncomfortable with this. I don't even know if we should now. Right. We should now probably put the interview up. I don't think we did.
If someone came to you and they're like, I want to make a new world reserve currency, you'd be like, yeah, okay, buddy.
Well, it was less. Listen, it was less that. Like I interviewed so many projects that week, right? And you're talking to people trying to tell you about their project that they're developing, and when you talk to somebody that says, when the majority of people say, well, I think this could. They tell you how this thing could like make the world a better place, right? Or what it's intended to do. And then when you get the opportunity to talk to somebody who's like, all right, look, man, I want to pump this. I want to pump this to the moon. I want to show you my bag right now. Well, all right. So RSR, just pulling up the price feed on Uniswap because it is on Binance. Actually, that is relevant, right? So it listed on Binance. RSR, what trading pairs do we have over on Binance? So we have Bitcoin, BUSD, and Tether, and BNB, of course. So it's over on Huobi, Poloniex, and that's about it. So
we can also pull RSR up on chart.
Yeah, that's where I was looking at it. Yeah, for Uniswap. Yeah. So so RSR BTC is that's okay. So we've been trading on Huobi a little bit. So for those of you who don't know, there's a couple of strategies beyond Uniswap. Now Uniswap is all right. Let me broadly break this down. Okay, the way that I see it. So if you are a retail trader coming into the market, okay, where are you going to be buying your coins? Generally, something like Coinbase, right? Maybe CoinFloor if you're over in the UK. Maybe Bithumb if you're over in Korea. Maybe Kraken, possibly if you're United States. Maybe Gemini, right? But those are your those are your first, biggest, established, comfortable, share your information with the government type places, right? And as such, because you're retail, and that's the first wave of people trying to sell you stuff, you're not going to get that much of an edge because cryptocurrency, as stocks, as anything, where the more you buy, the more price goes up. It's always a game of who is first to the party. It always is. For example, if you bought the earlier you bought Bitcoin, i.e., the lower price that you bought it, generally, the greater your reward is as price goes up, right? The cheaper that you buy in, the more money you make as price goes up.
The best way I've heard it analogized is with an inflating balloon, essentially. So when if you draw a spot on a balloon and then you begin to blow up the balloon, you see the spot expands like that. But if you drew a spot on the already expanded balloon and you can blow the same amount of air into that balloon, the spot doesn't expand as far because it's I don't know. Maybe that's a dumb analogy. I always kind of like the analogy. I like
It's
the
a good one.
expanding,
Yeah, it's a good one.
especially because people always talk about the markets as a
As a
bubble. It's like,
balloon.
okay, well, what
Yeah.
if we took that analogy a little farther? What if we think about it like as a balloon, where when you put the money into it, you're kind of like inflating the market. With the market cap is kind of like the circumference of that inflated volume of the money put into it. I don't know. I think there's something to
Absolutely.
it. Something to think. So it's just another way to conceptualize the markets, which are, of course, abstract human creations. We kind of have to create our own sort of mental scaffolding for how we view them.
Absolutely. Yeah, so Coinbase being like the first place you enter, if you buy things on Coinbase, well, you're not really getting in early for the most part, right? You might be getting in early relatively, like there's still could be some bull run left. But of the opportunities to buy, like Coinbase is not the first one, okay? So then let's go to something like Binance, right? You've got your Binance, your Bittrex, and your Poloniex, right? That's usually the first place that people are going to go after, as newbies, after they get off Coinbase. Like, oh, well, look at how many more tokens I can get over here. Now, if you go get those tokens over here, there is, I would say there's like, you kind of have to look at liquidity, right? So it would make sense if you'd say like, well, if Binance had less liquidity than Coinbase, maybe that makes sense. It's not that they have less liquidity, it's that there's like more market making going on over there. And perhaps on some days and at some times, there is actually more liquidity. But regardless, you have more selection of coin over there, i.e. you have higher risk. I mean, have you seen Binance lately? It is an altcoin slot machine. All altcoin exchanges are. And if you're new and you're coming in and you don't know what to do and you don't know what to buy, well, you're probably going to do one of two things. You're going to buy randomly, you're going to spray and pay. Or I guess three things. You're gonna spray and pray.
Almost like Cryptopia.
Right. Yeah. You're gonna spray and pray.
Although it's a little bit more reputable. Don't get me wrong.
Yeah.
I wanna
You're gonna spray and pray. You're gonna maybe buy what your friends tell you to buy, or what a signals group tells you to buy, or something like that. Or you're going to and you're gonna kind of go way too hard. Or you're gonna buy what's cheap, right? Which I think might be a good strategy if you don't know what you're doing. It's certainly better than maybe just randomly buying stuff. And because you're looking for like the greatest gain, perhaps, let's say. So you're going to have a greater selection of coins on Binance. And, when something gets listed on an exchange like Coinbase, it sends a signal out like, whoa, hey, this one's valuable. Look, all these noobs are about to buy this, usually. At least that's what's going on right now in a bull market. And, as soon as something gets listed on Coinbase, it tends to do fairly well. That wasn't the case in 2018 when things were dumping. When things would get listed on Coinbase, people were like, oh, quick, liquidity, sell. But you have greater access to buy things on Binance. So if you're on Binance and you happen to buy something before it gets listed on Coinbase, well, you don't have to worry about like trying to buy a pump. You already bought. You bought at a decent price because it was on a more obscure exchange. Now take that another step further. So you have Coinbase, Kraken, Gemini, Binance, Bittrex, Poloniex. And then if you got your next level, right? You've got your Huobi, your KuCoin, your Gate.io, maybe your HitBTC, although I'd probably kick that out to the like next level. But largely like your more obscure exchanges, even more coins over here. Now you got to be pretty careful about what's being listed on there because it's not like Uniswap where anybody can just list anything. They do got to pay. They got to do pay up like probably $1 million. The last time I checked, because I talked to developers and I know these people, it's about $1 million on average for a project to get listed on an exchange, right? These developers, these projects, they are extorted to list their money, to list their project on an exchange so they can get access to liquidity. Not only that, we know that a lot of the volume in cryptocurrency is wash trading. So not only do they pay the exchange, then they also have to pay some firm, desk, bot to make the markets on their exchange as well to make it look like there's liquidity. So anyways, and then you go one step out further, right? So here I'd put your coin mamas, your maybe sex.ios, your GraviXs, your Stex24s, they're really, really tiny, super small, super obscure exchanges where they're listing coins that you've never even heard of. You go to their Discord and there's like maybe 100 people in there. And then you go out another step, right? Which is now Uniswap. Like it used to be that beyond, like let's say your Stex24, your GraviXs, et cetera, there really wasn't another place that you could go beyond knowing people, right? Like if you knew people, if you knew the developers, or if you knew some of the early investors, like sure, they can just ERC20 of the tokens or send the tokens to your wallet. And then you just wait for those tokens to get listed and then get pumped up by speculators and then sell. But now you have Uniswap. And I think that Uniswap and other decentralized exchanges are as probably as close as you can possibly get to initial distribution of a token or a project. So that opens up a lot of opportunity, but it also opens up a lot of risk. So a lot of rug pulls, a lot of scams, a lot of danger out there. So just there's a lot of money to be made out there. There's a lot of reward, but you guys just need to be careful, like as careful as you can be in engaging with what you are. So check liquidity, check just do your own research. I know that sounds hollow, but there are specific tools. We talk about them all the time on the show. Specific things that you can do, and remember, I'm not really a spray and pray guy. I'm really a invest in what I understand and believe. That's been very successful for me over time. And I will say this: things that are worth investing in, you have plenty of time to invest in. With that being said, RSR. So Huobi has a little bit more price discovery, and the only reason I went into that tangent is to kind of highlight, like, well, look at RSR. RSR was trading on Huobi in a very tight range, and it looked like this probably looked like the moon, down there. But you had no idea this was coming. And that's because those individuals who were lucky to get in early on RSR got in before listings on Binance. Like RSR just listed on Binance just a few days ago, and it's doing pretty well. But the run up to that, we can see here. And so just one thing I want to caution you guys on, RSR can absolutely run and do what it does. But because again, same concept, right? This might look like, this probably looked like the moon from down here. So maybe this looks like the moon, but we're really down here and we're not sure what the moon's going to look like in 3 months. Good. I'm not going to say that RSR is worthless. You don't need a VPN for Uniswap. It's completely decentralized. There is nobody who's going to come get you, except, like maybe the feds who are watching your Tor browser anyways and know your HTTPS proxies. But there's certainly room here. You never know how high something's going to go. But just be aware of the environment that you're in. Like RSR, there's already a bunch of people who bought it really, really cheap. You're trying to buy it right now. It's not relatively cheap, right? It might be cheap relative to what it will be valued at tomorrow, but we don't know that. We do know that it's valued relatively high to what it was a month ago. So just be aware of always this cloud around you of people who bought way cheaper than you, who are waiting to get out. And as I said, or as anybody should know, if you have a plan for when you're going to get out, when you're going to start selling portions of your holdings, you will do better. You will lock in more profit than somebody with no plan. Try to sell as prices going up, because that's when not too many people are selling. The moment the candle tips red, everybody sees that at the same time who's watching the chart, and they think the same thing. Oh, that's it, time to sell. And everybody is now rushing for the door at the same time. And it is not the time where you want to be selling, especially on a centralized exchange where you can get a lot of slippage. And more especially on a decentralized exchange, if it's on Ethereum, because good luck getting that transaction through. Good luck. Can we check out Compound? Why not? Let's do it. RSR. So wait, hold on one sec. I want to give it's pamping. Overall though, my thoughts on RSR. We've had another leg up here. Nice push to the upside. RSR, BTC. We do seem to be accepting right here. We're at what are we at? 22.59, and then we've got that infinite Satoshi there. So let's just forget that. 22.59. Listen, this thing is pushing to the upside. I would be wary on the macro chart of kind of a reversal of alts here, but and this is not where I like to enter. I don't see a pullback right now. Look for breaks continuation, but again, this does seem like a sign of strength, and it does look like we're going to kind of close and continue up above 23.63. 23.26. So yeah, I'm sorry, I don't have really a strong opinion on this one. It's not, in an area where I like to trade it. It's not really it doesn't fit into my category. It just got listed on Binance, so it might have some legs, because hey, you never know, maybe it's coming to Coinbase next. I'm sorry, that's what I got, guys. Comp. Go ahead, Alex. I'm sorry.
It's along with all the other DeFi coins, it's pumping.
Yeah.
Had a nice little retracement, and then last 2, 3, 4 days kind of traded sideways, and today started pumping.
Let's look at.
Am I on my phone right now?
Nope.
So no one heard what I just said, but essentially, yeah, on comp we had a nice retracement from early August, like August 11th, down to late August, kind of traded sideways, and today we just started pumping. So I like comp here. I like it for a continuation. It's Yeah. I think you could do worse than getting into comp here. You know, a few of the other DeFi coins are also looking very strong here. SNX is looking strong here. LRC seems like it might break through its resistance. Ren is good here. Meta, uh, PLT. That's yeah. PLT is just yeah. That's on KuCoin now, but that's also a Uniswap coin. Basically, anything DeFi looks good today, right now.
All right.
Yeah.
Hey, forgot. There's 3 more bags in there, but we'll put them in. So Comp USD, I will say this. This is roughly, if you guys will recall, Comp was down at like 150, and I was like, all right, well, I don't think this is the time to buy. We did get a nice dip. That was the second dip down. Don't buy the first dip. Always remember that. Second dip. So certainly 125 was a fair price, at least what we've seen in Compound right now. Price did pump to over 200, 260 actually right here. We did have a nice little pullback here and kind of established. At least the market seems to be showing signs of strength here at 160 again. So overall, again, I'm wary of being aggressive in the market right now. I want to see some more signs of strength from Bitcoin. However, this does look like a good technical setup, right? We've had a nice pullback, and we're showing a sign of strength. Now, again, this is still a pullback buy, right? So again, kind of reversion to the mean is an ideal place to be looking to take profits. Ideally, I'd be wanting to kind of get out of this around 215 to 220. Doesn't seem like a lot, but it's a profitable trade. And then if we do continue to push up from that, you can consider that a continuation to breakout trade, a sign of strength, and you can scale back in. That's all I got. And then I saw some people want to talk about DOT. Again, same concept. These charts largely look the same, guys. Everything's kind of pushing to the upside. And, Alex is a little bit more aggressive, more, hey, let's be positive. These prices are moving up. I'm like, yes, they're moving up. Let's just be patient. You can take reversion of the means. Just be cautious with your position size out there. But you guys are going to ultimately make your decisions. Yeah, so I don't think it's germane. We can look at some more charts, but I want to get to Jack's thoughts on the news here. Appreciate all 160 of you guys watching, but it is like 1:30. I want to take a brief break, grab a little bit more water, and when we come back, I'm going to go over the Federal Reserve news yesterday and kind of our thoughts on that, and then we'll play you out with Dixie, guys. So with that being said, prepare yourselves for some mildly conservative / aggressive shilling. If you guys enjoy what we're doing and you like the channel, make sure to support us regular ways. If you're watching on YouTube, thumbs up button does highly help, actually more than you probably realize, because we always have to deal with being shadow banned because we do live streams and it's crypto, so it is what it is. We do what we love, but it does help. And if you're not subscribed, hit the bell icon, hit that button, blah, 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 all the things. Leave a comment down below, because again, we haven't quite figured out how we're going to give away the WSOT merch. Like, we got a ton of stuff that Bybit sent over here for the WSOT competition. Shout out to everybody participating in that competition, by the way. And yeah, I want to give it away. We got t-shirts, we got sunglasses, we got like this weird Rubik's Cube thing. We've got a pretty cool bag. I do kind of want to keep the box. It's the thing, and I like the stickers. But if you guys want it, I don't know. Maybe you can come rip it out of my hands. I'm not too married to it. Let's see here. Good stuff. Thank you guys for supporting the channel. Join us in the Discord. I know there's not links in the description down below. My heart goes out to Jack. Maybe if Jack is watching, he will put the links in the first comment after the video to everything. If you guys, obviously, if you guys are in cryptocurrency, links to exchanges that we trade on. Some of them give you deals, some of them don't. Whatever. Select what you want. If you're going to do something, do it anyways. And if you guys want to learn the concepts of how we trade, we do a lot of things beyond just talking about price charts on screens. Our premium signal service, our premium indicator suite, our mentoring community, and one-on-one mentoring, as well as access to our online trading academy, where individuals can learn to trade a good disciplined strategy, pathways to profit, or something similar. All right, so all that information's on the website, premium.krakencryptocurrency.com. Give the merch away to our top regulars in the live chat. We know who they are. Yeah, but is there like some not where I'm like, oh, like Jordan, I like you. And then, for example, like Yo-Yo123 is like, oh, you like Jordan. What, you don't like me? I don't watch your show anymore. I don't feel like I don't want that pressure. You know what I mean? I don't want that pressure. Thoughts on Algo? Perhaps you saw the shirt I'm wearing. I love Algorand. It is, it's probably, right or wrong. It's one of my favorite projects out there. I do have a position in Algorand. I haven't sold any of my position. I purchased it after learning about the project and investigating the project. I was lucky enough to sit down with Silvio Macaulay and interview him, the founder of Algorand. The interviews here on the channel and our Crypto Currently playlist. Good team, good project. I really like it. So I don't really have any thoughts on price. I really don't tend to. A good truth here, guys, is a lot of times when I purchase long-term positions, I often do not look at the charts for long periods of time. I pay attention to kind of like the news. But yeah, Dan, he needs to pee. I need to pee. When we come back from the break, we'll talk about the news and answer some of your questions as time allows. And until then, advertisements. Go. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at buybit.crackingcryptocurrency.com and rest easy for a change.
Oh, well, Justin, as you can see, I'm still sitting comfortably in my long. I haven't had time to check the charts yet, but I mean, just give me 1 second. Okay, let's see here. Okay, well, it seems as though, I mean, in the big trading world, I mean, things do go south and they do go north. I mean, they go both ways. But at the same time, what I gotta say is, let's get rid of this long and get into our shorts, baby. Because guess what? It's summer out there in Bitcoin City. Get your shorts on. And don't be flip-flopping around. This trend's your friend. Back to you.
Oh, whoops, wrong button. How about this one? Very professional. All right. One of these days, look at the scenes. All right. Hey, we kept all of you guys. That was cool. Thank you guys so much. Hopefully you enjoyed the commercials. Yes. Shout out to Bybit. That is the exchange that I trade with leverage. I wouldn't really trade with leverage on any other exchange, with the exception of FTX. Pretty good exchange. But yeah, certainly the majority of my capital I do use on Bybit. Traded on BitMEX for a long time, and that is a terrible, horrible place. It's awful. Anyways, and yeah, Jason is very, very good at what he does. Let's see. Let's see here. Yep. Listen, I don't just I don't low key like Algo. I do really like Algo. It's a good project, good team. They're pretty brilliant over there. And I like, listen, just fundamentally, I like that they focus on their business applications. Very similar to what was that? Shoot. I can't even think of it now. One of the reviews that I did. Moving on. I'll remember it. Sometimes things get lost up here until I look at my notes and then they come back. So anyways, I want to break down the news. And to do that, I am entirely underprepared. Okay. Just have to pull up the link. Sorry. Pulling up the link. Meanwhile, you guys talk amongst yourselves. Thoughts on singularity.net from usual suspect. I don't have a firm opinion, and I don't have the chart in front of me. Let me take a quick. Hold on. I've lost my mouse. There we go. Anything special about singularity.net off the top of your mind there, Alex?
AGI. Yes, I've heard something vaguely how they're going to be integral in blockchain interoperability. So they're doing something AI and blockchain related. That's what it is. They've got AI oracles.
Mm-hmm.
So the oracles, like, yeah. Link's oracle thing is that they're all they're gonna have so many different oracles. It's gonna be like an oracle marketplace, and that's what's gonna make it decentralized and distributed, because they're gonna like compete with each other and stuff like that. And in that way, the oracular information will be trustless, because they're competing with each other for I guess your trust. But this is AGI is different in that the oracular information is going to be provided by, I guess, an artificial intelligence, which I guess if you did it right, that'd be pretty nifty. But if you just asked me, extreme fundamentals, AI, blockchain, I don't know what they do. Sign me up.
Going long.
Yeah.
Give me the bag.
Sign me up. So got fundamentals.
I see. I think slightly different, but the block stack is another project that I like quite a bit. I think they have the best. I think they have the best team and the best value prop for Web 3.0. So, okay, so, yep. Pro tip, yep. Thank you, Silent. And Silent, by the way, hey man, I will reach out to you, man. Like, it's been on my thing, it's been on my calendar. It's been an absolutely crazy month. I don't know if you guys know. Certainly you do. I'm not saying that you don't, but I am a kind of person that when I'm all in, I'm all in, and I certainly am all in on what I do, my job, my profession. And the last 2 months have been non-stop, all day, all night for the most part. And you guys see that I pushed myself pretty hard. Like Wednesday, I needed some sleep. So, and thank goodness the guys were here to keep things going. But anyways, let's talk about the Fed. So this information came out yesterday. Yeah. By the way, Ben Gertzel, go listen to his interviews on the Joe Rogan podcast, and he's kind of a guy that you want to invest in. So this information came out yesterday. Jerome Powell made an announcement of kind of the Fed's decision, and it was largely treated as, well, like inflation is no longer a thing. We're not worried about this, which, by the way, like highlights, let's say, things that, again, a very smart person. I've had him on the show. We did an interview. It's also on the Crypto Currently playlist. Ansel Linder's been talking about from Bitcoin and Markets, talking about how, really the real danger is not inflation from all this money printing, like everybody says. It's going to be deflation. So the chairman of the Federal Reserve Banking System, Jerome Powell, he outlined the plan for the central bank to change their monetary policy and change their definition, not necessarily change the definition, but change how they approach the concept of inflation. One major aspect of his announcement was, how instead of, and I like how Alex put this, basically instead of trying to not necessarily change or retarget 2%, it's more how they foresee or how they consider achieving that goal, right? And to be quite honest with you, as somebody in the cryptocurrency space, it's very mealy mouthed, right? It's nonsense. And I think that I think that a very common takeaway for somebody like myself, who's a hard money advocate, who is very critical of MMT, it's very easy to just kind of shrug and be like, well, this is MMT at work. This is what you guys, this is the best you got. Because it's a 3 cups in a shell game, or it's 3 shells in a pea game. And it's a fraud. But basically what they are saying is, I love how Alex put this. He said, instead of, let's say here's 2% inflation. And previously, the Fed's kind of conceptualization was, okay, we're going to print money until we just we reach 2%. All right, stop, call off the presses. That's how it used to be. But really what they're saying now is they're like, okay, well, listen, here's our target. And we're not really concerned about overshooting it anymore. So we're just going to, instead of just like creeping up on it with our money printing, we're just going to say it's okay if we just go, all right, printing, and overshoot it. Like, who cares by how much?
3% inflation.
3%, 4%, 9%, who cares? Whatever, and just, it'll be okay. It's fine. It'll just, naturally, supply and demand or something like inflation will just kind of like pull back. It'll be natural. It's okay. It's fine. And, maybe if we overshoot it, maybe we'd be like, all right, are we sure we overshot? Let's just a little bit more. It'll pull back naturally.
The Fed doesn't even have a very good way of measuring inflation. I mean,
I think did I get it? Yeah. The definition of inflation is itself very nebulous. I mean, it's the idea that the basic necessities are going up in value because but here's two problems with that. First of all, different people have different things they consider basic necessities, and second of all, basic necessities change over time. So in 1980, you wouldn't consider the price of a computer a basic necessity. But nowadays, you would consider the price, you would consider a computer probably a basic necessity. And there's some talk about maybe like internet access is like, an important human right or something like that. I don't really want to wade into that. But my point is that different countries,
long Bitcoin, short the banks.
Yeah, different times in society have different things that they consider to be basic necessities, and I don't think the Fed has any grasp of what. Okay, this thing going up in value means that inflation has taken place. What? Does toilet paper have to go up in value? Then inflation is taking place? Okay, maybe not toilet paper. Maybe that's not necessity enough. Maybe some foods. Okay, well, which foods is a basic necessity? So I know a lot of people that like if this food becomes more expensive, they replace it with this food over here and stuff. So they might not necessarily be impacted by that right away. I just, I'm giving you all these different examples. Like it just. The Fed has no good definition of inflation. I dare you to look it up. First of all, they changed the definition in the mid 1990s. So whatever inflation measures we had before the 90s, they don't equal today's inflation because we're measuring different aspects of the economy now to get our idea of what inflation is. It's an incredibly nebulous concept, and then as Justin said, now they're gonna overshoot this inflationary target with. Okay, I feel very strongly on this topic. If modern monetary theory is entirely sort of based around this idea of inflation, like we can print this money as much as we want, as long as inflation isn't going crazy, right?
As long as we have the guns.
That's the rule behind modern monetary. Like we track inflation, and that tells us if we're printing too much money that it's hurting the economy because we don't want too much inflation. We want just the right amount. If you've got no definition of it, how are you tracking that? I don't know. How did the U.S. dollar get debased by 85% since the 70s? Maybe their inflationary target sucked.
CMT says, I doubt the Fed understands MMT, and we could have a good conversation about the merits of this. But listen, I am not.
That's a fair point. Maybe you're right.
Well, I'm going to make my point was that I feel like I really do honestly believe this. I've talked to some very, very, very intelligent people who have argued on the point of MMT, and very similar, kind of Alex and I were having some philosophical discussions last night. And, I am the type of person who, when we reach a topic that has a high probability to be conversed about, where individuals end up talking past each other, right? Because you're not necessarily using the same language, or you're using rhetoric, or you're using emotionally charged language, or you're talking about subjectivity, right? Well, it's very hard to talk about facts and come to an objective opinion or an objective agreement, right? And sometimes it can even be hard to agree to disagree, right? Even among friends. And I think the easiest way to overcome that and avoid that is to go down to basic principles, like first principles, right? And then build your argument up from there. Whenever you reach something that you disagree about, you're like, okay, I disagree. You say you disagree. I have a point. You have a point. Well, let's go back to first principles and build the argument up from there and see very simply, like, does this pass the water test? Does this pass the stress test? So And in almost all of these arguments, we reach a point where we go back to first principles and we build our way back up, and what they're saying doesn't make sense, right? It invalidates some other area of common logic, right? And so perhaps they have been poor candidates for the job. Perhaps my thinking is flawed, or perhaps I'm biased. But in any way, I would say, from what I understand, and having talked to a lot of people, I don't think anybody understands MMT. MMT is very much like quantum physics, right? There's not really one person who can say, honestly, like, nope, I grasp it all 100%. It all makes sense. It fits in here. There's a lot that is thought. There's a lot that is speculated about. There's a lot that's projected. And a lot of it is just simply untested theory. So yeah, I don't think anybody really understands MMT, because it seems to warp and change every day. What I do understand, what I see, what I think is inarguable, is if you just look at the state of the world right now, and there are, let's say there's maybe two ways to look at it. One is that, look, the world is in a better place. There is less poverty. We have more stuff. We have more things. But we're still not able to overcome that kind of same common thing, which is you build up social hierarchies. Social hierarchies vacuum up wealth from lower social hierarchies. And eventually you reach an area where your political system and your kind of financial system becomes so corrupt and overpowering that everybody knows that. Everybody gets pissed. And then you get civil unrest, riots, and ultimately society collapses. It's happened over and over and over and over again throughout history. It always follows, or perhaps is sparked by, currency debasement, and can end, and is usually ameliorated for a while with war, false flag attacks, terror attacks, lies, perpetrating members of society. Racism has been used quite often. Prejudice has been used quite often. Well, it's these people on our society's fault. Let's round them up and throw them in camps. All these tactics and tricks have been used over and over and over again, and they're always used to distract the public from what the ruling class is doing. It's it's simple. It's true, and I see it happening right now. So for any benefits that the world has seen, we are still riding right back up to the top of the same cliff again, because people don't study history, or because perhaps we just don't learn, and we're going to fall right off that cliff. And it seems that every time we go up and over the cliff, it's like we were driving up a taller cliff, and it takes longer, right? So again, I don't know if you guys remember this, but we went through it as a civilization. You guys weren't alive, but we went through the Dark Ages, all right? That's kind of what happened the last time the largest empire drove themselves up and off a cliff, right? Well, like, what are we going to have now, right? Because now we have like far more powerful weapons at our disposal if things tank. So these things worry me. So anyways, critics of I'd say that, particularly myself, but critics of Powell's decision are going to say that this is a surrender of America's economic policy to inflation, right? But others still, and it's a valid point, are going to worry that this is a sign that the central bank is really looking to address the significant problem of markets experiencing the impact of a deflationary trend, right? Not inflation, but deflation. Because collapsing demand, which is what we're seeing, due to the economic fallout of something like the coronavirus, which, by the way, is another huge concern of mine more immediately, right? I do feel that it's likely or probable. I am concerned that we're going to get another mandatory lockdown that is certainly going to incite a market meltdown, just like we saw back in March. You guys all saw it. You guys were all there. And that's going to collapse asset prices. It's going to collapse asset prices. It's going to happen. And it seems if it was going to happen, there's never been a better time, right? When it happened the last time, when we were at all-time highs. Where are we at now? All-time highs. Makes a lot of sense. And so it seems, at least to the Fed, the correct political move is to maintain the appearance of control over the system to the limited degree that they have. And they're doing this by keeping markets pumping and keeping asset prices high. The Fed and the big banks, what they fear the most, what they should be concerned about the most, is that all the assets accumulated on their balance sheets are going to collapse in value. And it's going to take them with it. It's going to take them with it because we already know that the majority of financial securities of assets are not held by the majority of the population. They're held by a very small majority, or they're held by a very small minority of the population. And this is nowhere seen more so than in banks and the businesses involved in the financial sector. They hoover up asset prices, and because they hold them, that's often called wealth inequality or whatever. Like, that's a problem, but it is a problem for the holders of the assets when those asset prices collapse in value. So now, of course, when asked, Jerome Powell said yesterday, he said this is a healthy updating of the Fed's monetary policy. And with this updating, the Fed has formally declared that targeting a moderate inflation rate above 2% is now their top priority. Shouldn't be their top priority, but again, as Alex alluded to and talked about earlier, the Fed is an imperfect engine. Their tools to actually affect change are ineffective, not just because of their nature, but because of their execution, right? Because of the nature of this kind of hoovering cycle of the distribution of new money, right? It's the velocity of money. The distribution of new money does not circulate as it needs to throughout the economy to do its job. It just gets centralized in one place and then is used to purchase assets and continue this hoovering kind of game of rings. So let's see here. And this is obviously running following a period where inflation has been quite low. So they want to try and even out this with this policy and keep inflation, quote unquote, from rising by printing more money. I don't know. It doesn't make sense.
We've got some interesting conversations, Zach. He seems pro-modern monetary. Kind of.
Let's see here.
Adjusting a little bit with
Comments.
All right, let me check it out. Let's see here.
Testing. Anybody hear this?
Hold on. I gotta see here. Yeah, your headset's on. All right, let me hold that back up. All right, let me see. Hold on, Jürgen Ernst, good to see you, my friend. He said, inflation, that definition is really simple. Give the workforce raises until they become too expensive, then inflate their gains away. He said, average was 1.8% inflation for the last 10 years. They hit 2% 80% of the time, and they want to up that average from 1.8 to 2. Again, my issue is not necessarily with the numbers. My issue is just kind of with the whole system. Like, with that, so going back and not to use a logical fallacy, but not to like pull something into the conversation that perhaps is not germane to what you're stating. Kind of my broader issue with the entire system is just what I see with my eyes, right? There's lots of ways that you can make mathematics and statistics prove your point. And you can make logical arguments that make factual sense, but still result in, like, if you take a step back and zoom out, you can still say, like, well, this isn't working still. Like, yes, it's doing what you want it to, and you're achieving your goal, and you're doing it well. But the end result is still toxic or caustic or harmful, let's say. And yeah, I am familiar. I do believe I am familiar with Stephanie Kelton. I do believe she's been recommended to me before. Supposedly XRP is going to be used as a bridge currency for CBDCs. It's never going to happen. It's never going to happen. If you buy XRP, you're losing money. It is a failed company. They're taking advantage of you. They're taking your money. XRP is not going to ever moon. It's dead. Bye. Sorry. Let's see here. Europe is not printing as much money as the USA. Would the euro inflation be lower than? To be honest with you, I don't know. Again, as I said, there's lots of ways the math and statistics would work out. It's really not the angle I want to attack this from, because that's not my position of strength or what I'm most proficient in. What I'm pretty proficient in is like just seeing that its application or its justifications, if you reduce things to base principles and you get into controversial kind of disagreements, a lot of what MMT would suggest or propose to me doesn't make sense from a level of first principles. Yeah, I think Alex makes a good point. I have to disagree with this. Zach says that we've been using MMT for decades, and I'm just going to stop there. Yeah, for decades. We've been alive for thousands of years. It is a new, untested theoretical system that I think we can just see has maybe not by MMT's application, perhaps just bad time, wrong place, wrong time. But yeah, like MMT's been around for decades, and we've been seeing things get pretty bad for decades. Now there's talk about using it for social programs. I don't even know what you're talking about. I have almost never heard. I'm not familiar with.
Like the money printing is supposedly going to go towards stimulus for the people. You say, oh, now modern monetary theory is bad because the money's going to be printed to help people.
Okay, I get that.
But like what I argue is like, but it's not. It's being printed to be given to corporations, and they're
Right,
paying
right,
lip
that's-
service to social programs here.
Yeah, and that's not even MMT. I think that's just application. I think that's just velocity of money, right? Like you have to look at logistically, like how is okay, it's fine that they print the money for social programs, but that's a lot to unpack.
Well, I
like
mean,
A,
he's saying that people are really only arguing against modern monetary theory, because suddenly it's being used for social programs, and that when all the money is being printed and stuff for, war and
corporations,
stuff
like,
like
yeah,
that,
yeah,
nobody
yeah.
had a problem with it.
Yeah, that's a little bit. I get that. I certainly agree with that, and I agree with Zach on that. I think that that's probably like a hard conservative viewpoint, like, oh, we can't give money to social programs. I don't feel that way. I think that's probably just a fallacious argument on their behalf. So I do agree with you on that. Yeah, for sure. But yeah, so going back to what my point that I would make is that even if that was the case, well, we could then evaluate, like, is this objectively true or bad, or true or false? Like, is like printing money for social programs, is this effective? Well, I don't think we can determine that, because you have this velocity of money and actually execution issue. So when the Fed prints money, they don't just shower it out to the people or distribute it to everybody equally, right? It's not right. It's not an airdrop. You know what I mean? It goes to banks, and the banks use that money to buy assets and then give loans. And overwhelmingly, they're not giving loans to the people that need it the most. So the money is not getting where it needs to go, even if it was for social programs, even if it's printed for social programs, it's not getting there. And until this latest round of stimulus, where they did actually send direct checks to people, but they sent a lot more money into the financial sector. So that's underbalanced. So the financial sector got the money first. So you have that same velocity of money issue. And also, again, I'll just point this out. This is there is an owl on my middle finger. It does mean Illuminati. Yes, I've been jumped in, bro. And even if I may point this out, show me a society throughout history. Don't talk to me about Scandinavia, bro. Show me a society throughout history that has gone without giving direct stimulus to its people, and gives direct stimulus to its people. Again, I think this is why I can rationally rule out like certain arguments here, like Scandinavia, for example, because those countries didn't start stimulus to their people under duress, right? America has started giving stimulus to its people under duress. And I cannot think of any historical example of a country that was forced to give stimulus to its people because of duress. And the duress is not really because of the coronavirus. The duress was really the economic conditions because of the hoovering up by the financial sector of the majority of money in the system. They're forced to admit, like, hey, our money distribution system is rotten. We can't get our money, even if we print it infinitely, we're not getting it effectively to the people that need it. So we're just going to have to send it to them directly. That usually precedes social collapse, right? This is just something that definitely noticed throughout life, or throughout studying history. So there's a lot I agree with you on. I think the larger problems here is not MMT. I think the point I'm making and the point you're making are a little different. I think it's the velocity of issue money. I think it's the issuance of the money that is actually maybe the issue with social programs. I'm not against money being utilized for social programs whatsoever. I don't think Japan is a good analogy because Japan is a completely different culture. They have a completely different mindset. They do things completely differently, and their economy has been absolutely stagnant. And but this is But you make a good point. Your facts are correct there with the point you're trying to make. Yes, I'll give you that. It's not cratering in on itself as austerity. I don't think that. Perhaps it's not. Perhaps it is. You do see the signs, I think, certainly, that things are beginning to crack in the system. And it doesn't take a lot to push over something that's fragile, right? It's things don't. Sometimes things crack a long time and break slowly. But more often than not, they're just kind of crumbly, and you don't really realize how weak it is until something comes in, a very large force, and hits it with a lot of momentum, and then it falls over. And then everyone's like, oh, wow, like America's just gone. It can happen overnight. So this is a good conversation. Please, sometimes I get off on rants. Don't feel like I'm coming at you or disagree with you. Like, I think you're making some good points. And obviously there's like a power differential here. Like, like I have the mic, I have the floor, like I have to read your comment. Like, so this would be a good thing to talk about, man. Thank you. I appreciate the passion and the unique ideas. I certainly would like to hear more, man. Let me get back over here before everybody taps out. That's kind of like really all I have to say about this. At the same time, perhaps with how bottomed out interest rates are, maybe the Fed doesn't have really any other choice. They don't have perfect tools to push the market around, to push the economy around. But the idea is that, low interest rates would encourage consumers and businesses to spend, obviously, rather than save their money. So that's just the kind of the classic, like spend. We'll spend ourselves out of debt, or we'll spend ourselves out of a bad place in the market. It's good for the economy. It's not good for individuals, right? And so that's another issue that I have with a lot of this, is that it's this 3 cups in a pea game, this 3 shells in a pea game, where the advice, like what's good for the economy, whatever that means, is not good for the individual families in that society, in that economy. So a lot of this doesn't make sense. Savers always historically are overwhelmingly rewarded. Spending recklessly, if you guys know anything about budgeting, is not a good thing. It's not how you build wealth. It's not how you become happier. It's not how you grow. It's not how you thrive. It's not how you become successful. It's just not. Saving and investing wisely is how you get there. And so, the whole concept of get people to spend more, let's stimulate the economy, don't incentivize them to save. It's not. Well, you go down to first principles and you're like, okay, well, so what is good for people? Should they save or should they spend? Well, they should save. Okay, well, so then we get to this issue. Why are we doing this? Like, why are we doing what's good for the economy and not what's good for people? Ideally, if we had time to think about it, and if we had control to change it, I think that people would think to themselves, yeah, do we really want this system? This doesn't really make a whole lot of sense. Like, is this what we voted for? I think that people would overwhelmingly vote against it. So
can we use that? Let's segue into precious metals from Federal Reserve, because that's
go
what
look
they
at gold. Yeah, let's do it. Let's go look at gold.
I think gold looks great for a reversal along here.
I hope so, because that was another thing that concerned me. So, it'd be nice. Just get on the stream.
All the precious
say, hey
metals
guys,
look fantastic.
yeah, I was bearish last week. Saw the lower high on gold. I don't yet see signs to invalidate that yet, but this is possible. Okay.
My face is blocking gold.
That's good. It's right where it should be. I want it to be like a mystery box.
Gold.
Mystery
Hi
box.
guys.
Mystery box. All right. So one of the things that I had been concerned about moving into last week was obviously we had a very, very sharp retracement a while ago on gold, right? And when this happened, I was like, all right, let me think about this for a while. Now, keep this in mind. Long-term holdings. I have been accumulating gold for quite a while. I am not accumulating gold right now at these prices, but I am a very firm, hard advocate for. I'm a firm and hard. Wow, that's like weird. I'm a firm advocate for hard money, right? That's even weirder. But moving on. One thing that I look at gold, though, as in this current market environment is as kind of a bellwether for what larger investors are doing. And then, of course, we've got all of the calamity going on at the COMEX, where, I don't know, we might see the collapse of all paper, silver, and gold. But we'll see. We have formed, so we sold off so significantly in gold that we cannot ignore that, right? So that means something. When you see a lot of volume, it means somebody out there who matters did something. So somebody wanted to get rid of a lot of gold at this price. And that indicates that, to me, that is a signal that, hey, investors want to move back into cash and potentially look for another continuation of the market, or be back into cash because they think that we're going to see a crash of all things like we saw back in March. Nothing was saved. Nothing was spared, not even gold, not even Bitcoin. So if we get something like false flag attack, a declaration of war of some kind, it's been quite a while since either of those things have happened. Yeah, it feels about right. And again, remember, we've got a lot of civil unrest. And what do nation states often do to ameliorate civil unrest if they can? Well, hey, it's their fault over there. Go kill them, not us. Yeah, that's what they do. And if they're lucky, we do. We go kill them and not the politicians who started the problem. So
yeah, there's war, and then there's the bread and circuses.
There's bread and circus, yep. So gold formed that lower high following that meeting. That's a sign of weakness. We have come back down and put in a little bit of a double bottom here. So I'm not going to say that the fight is over. I have seen the sign of strength. I have not committed to this. I have in Bitcoin to a degree, but certainly this was influencing my decision. So I do want to see continued signs of strength here from gold. I do agree with Alex. This is a good setup for a reversal setup. But again, maybe it's just the mode or mean that I'm in. What I would be looking for is, conservatively, I'd be looking for a version of the mean trade. So kind of, I really like where price went last time. That's a good, about 50% retracement. That's actually a little bit more, probably like 60% retracement. But I want to keep my eyes on this. I want to be very, very cautious before I move into or recommend like kind of long-term positions. But yeah, this doesn't look too bad. I want to see this hold up. I want to see this. I want to see price move up here on gold pretty quickly. I want to see acceptance at higher prices above 2,000. And what I don't want to see is us grind out these lows. Even if we have some volatility and chop here, the longer we stay down here, I think the more likely it is that we continue to move down, which again, is the bellwether that I'm watching for that makes me kind of want to be short all markets. But I'm not there yet. Looking at ZAG too. Let's check out silver. Did you have any? I'm sorry. Did you have some more on this front?
No, I like what you had to say. I think all the precious metals look strong right now. I think one of the reasons they look strong is the Fed's announcement.
Mm-hmm.
I mean, if the Fed basically just said, "Hey, man, we're not stopping printing money anytime soon,"
Yeah,
and
money, all money, all the time.
Let's say you're a professional institution, you've got to say like, well, we got to keep our U.S. dollars. In that case, we need to hedge our dollars and buy something that's going to be a hedge against anything inflationary that the Fed can do. So, obviously, precious metals are really good. If you open up palladium, looks fantastic right now. If you open up silver, looks very good right now. Platinum still trailing the others, but it looks good too. I mean, I wouldn't not buy platinum. It's just that the other ones look better.
Yeah, silver. So to me, just fundamentally and just from a perspective here, technical perspective, silver looks the strongest. Silver has put in a clear higher low. We have not been able to crack this high. If I see us crack this high right here, 28.50, let's say, I'm going to buy the next pullback. I'll take my chances on gold. I've been accumulating gold. I got a lot of gold under $20. I'm absolutely I'm ecstatic, honestly, where the price of silver is at right now. And silver is it's got some more things going on than gold does because of the COMEX, right? Again, I'm not the foremost expert on this, but the smartest people in the room that I talk to, the quantity of silver that needs to be delivered if buyers decide to take physical delivery of the COMEX, they do not have the silver. Now, where can they get the silver? Well, they would have to gut the paper ETFs trusts, right? This will happen behind doors. They won't tell it. If you guys don't think it's going to go down like that, it will absolutely go down like that. These people are beholden to nobody. If, by the way, that silver is not already gone, there is no inarguable evidence that silver actually exists, right? Or hasn't been dipped into, or isn't fraudulent. So again, we just covered.
Is this thing on right now?
Yes.
Yeah, a lot of people don't realize this, but the way large institutions go short on precious metals is by creating, they call it paper gold and paper silver. So like their certificate that is supposed to represent like one gold and one silver, but they go short by creating it and it doesn't exist. So they sell these, like, I guess paper gold is really like a voucher for gold. It's supposed to represent gold, and they sell it on the open market, and in that way they're able to push down the price by selling non-existent gold. And then people they have this gold, and so the way the supply and demand works, they have bought their gold even if it doesn't really exist, but it represents gold. And so that demand is now gone from the market, price deflates, and then the institutions can buy actual physical gold off the spot market on this lower price by having gone short the futures market with these non-existent paper products. So that's yet another way that large institutions and governments can manipulate and trade the market. And by the way, it's not illegal for the government to manipulate the market that way. It's just illegal for you to manipulate the market that way. So don't you do it.
All right. So hey, we're past 2:00, guys. We got to start wrapping it up. We got some stuff to do. Let's see here. Bruce Baker says Tesla next week after the stock split. I think it's going to pump. Listen, keep this in mind, right? Listen. The stock split is a known, right? So it's also possible that nothing really happens, right? Like it's maybe the more probable thing that nothing happens. Known. Everybody knows about the stock split. It's an opportunity. What it is it's an opportunity for those who want to get into Tesla at like half the price to buy up the new split. It's an opportunity for individuals who are holding Tesla to dump on demand coming in from the open market. So, overall, it's just like trading. Help me. For like what? Why is the word failing me? When companies announce their profits, earnings. It's like trading earnings, right? There are strategies around trading earnings. They're often high risk, and you can trade those, right? It's just like, hey, you want to go to Uniswap and you want to throw $1,000 into Polkadot, be my guest, right? But just understand But it's not like
It's a gamble.
It's
You
a gamble.
don't know what
Right.
unless you know what's on the earnings report. It's like a gamble, but you make a small gamble. That's what we do. There are techniques, and you can make an educated, statistically viable bet on what's going to happen with the earnings.
like for example, like I am Mr. Risk Management. Something that I like to do, Bitcoin dice games, right? Martingale strategy, right? I will roll those dice, and I do pretty good. Like I have a strategy, right? But I understand that I'm going to play with $1,000, and hey, I might turn this $1,000 into 10,000, which I have, or I might lose 1,000, right? It's something. It's not. I do want to put an overall rule here because I do have one. It's not like, hey, just throw your play money into this. It doesn't matter, right? Because $1,000 makes it worth it if you hit. Like, you can turn 1,000 into 10, into 40, into 50, right? It's possible. It happens. But you also have to understand, like, okay, how much play money are we going to allow ourselves per year, right? So let's say you're making $60,000 a year, right? Let's say average income. Okay, can you really like justify $5,000 as play money? I don't think you can, right? But I think you could justify 2.5. It all depends on where you're at and what you're saving. Could you use that 2.5 for better things? Yes. But if you're already putting in, let's say, a goodly amount into those things, and you have a good plan, you're trading frequently, you're trading correctly, you're investing properly, I don't think there's a lot of harm in responsibly taking a little bit of aggressive risk. If you want to aggressively grow your capital, look at my interview with John Ellers, right? John Ellers is one of the traders in the world that I look up to the most. He's a brilliant man. I love his indicators. I study his work. I had the pleasure to sit down with him and speak to him several times now. And in our interview, he's more aggressive than me. He trades like a cowboy. For example, he trades futures contracts on the SPY, the ETF, the SPX, but on the CMEs and the ESs. So he will trade one contract. That's $5,000, right? And when he doubles that up, he'll trade 2 contracts now, right? And when he doubles that up, he'll trade 4 contracts. So it's just this continual doubling up. And that is how you aggressively grow your capital. If you're trying to get rich, if you're trying to turn a small amount of money into a large amount of money, that is the probably more efficient way to do so. The way that I trade is I have X amount of capital and I want to grow it. I want to grow it steadily, consistently, reliably. But I don't, and I want to preserve it. I don't want to lose too much. And that's how I do things. I think that's the better way to do things. I think that's the safer way to do things. And when you have that structure, then if you do want to take more aggressive risk, well, at least you will have the conditioning and mindset to do it as safely as possible. With that being said, I'm going to bounce out to this scene. People are already flooding out the door. Thank you guys so much for joining me for another episode of Breaking Bitcoin, brought to you by I was looking around here. Brought to you by the 2020 bull market, guys. All right, listen. It's possible, but it doesn't matter what you buy right now. Stonks only go up, but we are also a little bit overheated. So just be cautious out there. Make sure you guys are following your strategies. If you guys do not have a strategy and you guys would like to attain one, highly recommend you join us at premium.crackingcryptocurrency.com. Links will be in the comment down below in just a few moments, and you can begin building your own objective strategy or taking advantage of some of our services. Make sure to follow us on the socials. Alex is kind of covering them up right now when I put them up earlier, but it's all cool. Again, they'll be down below. Discord.crackingcryptocurrency.com is a good place to be. And I really want to thank Alex for joining me on today's stream. We'll be back tomorrow.
My pleasure. Thanks for having me on.
Problem. All right, guys, be good. Alex, by the way, he'll be here for a few days, so look forward to more. So see you guys in the Discord. Trade safely and be good to each other, guys. Bye.